Hello, this is Brian Shannon from Alpha Trends Blogspot. It's Sunday, the 1st of April, 2007, and we're going to take a look at some stocks for trading for the week of the 2nd. I've got shares of Immersion Corporation, symbol IMMR, on the screen right now, and you can see the stock had a huge breakout here based on some kind of news. And it looks to me as it's held up very well here on diminishing volume. So I think there's a good chance that we're going to see a continued upside in this, at least up till these highs. In fact, what we're going to do is make our target based on not even the weekly time frame, but on the monthly time frame. Back here, you can see the high back here in 2004 was $10.39. So we'll make our target actually $10.25. The way we'll get long this stock is to buy it above $9.10 a share. So we're looking for it to clear the high of last week. And above $9.10, I think it's still pretty low risk. We put our stop at $8.95. So that's only 15 cents of risk in this case for the opportunity, hopefully, to make $1.15 if it does get up towards that $10.25 target that I outlined. LPNT is the symbol for LifePoint Hospitals. You can see here on the daily time frame that it keeps hitting up against this 38.5 level. I think it's ready to break through it. We've got that 10, 20, and 50-day all moving averages all heading higher, and the stock looks like it's ready to get going. You look at the weekly time frame, you can see that it does still have some good upside left in it above that level. You can see that that level's been important from back in here, and breaking past that, I think you'd see some pretty significant upside. Well, we're going to make our target is $39 a share, and the way I think we ought to play this is, first of all, you can see that it did have this strength late in the day on Friday. So I'd like to see it pull back to at least $38.15 or so, and then buy it above. I'm sorry, 38.05. Let's do that again. I'd like to see it pull back to at least 38.05, and then to purchase the stock on strength above $38.15 a share. We then put our stop at about $37.98, and that will give us 17 cents of risk. And again, the target being $39 a share, that will give us upside of 85 cents in shares of LifePoint. And next up, we've got ZBRA Technologies, symbol ZBRA. You can see that this had a big breakout about 6 weeks ago or so on big volume, and it's pulled back to that former resistance level. Looks like it's found pretty decent support in there over the last few weeks. And on this daily time frame, we've got that 10 crossing back up through the 20, the 20's above the 50, and they're all starting to advance once again. So I think that it looks like it's time to get back involved in this stock once again. And in order to purchase it, I think we can see if it takes out this high right here from Friday afternoon at $38.75, that would be a good place to purchase the stock. And to put our stop at $38.48, that will give us 27 cents of risk. And as a minimum upside, I'm thinking $39.50 to $40 a share. So let's just say $39.50. That would give us 75 cents. If it makes it up to 40, obviously that'd be $1.25. And so 75 cents to $1.25 of upside with 27 cents of risk in shares of ZBRA. Last on the long side is shares of QUALCOMM, and QUALCOMM first broke out back in mid-February, but then got hit with the rest of the market. But it recovered very nicely here with volume as well. So you can see the volume was low in this area. It recovered with big volume, and then it's been kind of building this little flag in here on lighter volume. We started to see a little bit more volume creep into the stock on Friday, and now it looks like it's ready to get going once again. I think that breaking above $43 a share is where the stock could really start to regain its upward momentum, and I'm looking for the stock to move up to 44.5 or so. So that would give us upside in this case of $1.50, and I think that your stop initially is going to go at about $42.48, so right down here. But once the stock gets up to 43.25, raise your stop to break even. So once you have 25 cents of profit in this stock, raise it to break even. No reason to continue to risk all that 52 cents. Lastly, on the short side, shares of AmeriCredit. Let's take a look at the longer term. Look at this monthly time frame. It looks like this stock could be building for big problems in here. If you look at this monthly shoulder, head, shoulder in here, you take the height of that, 32 down to about 22, so about 10 points. It's suggesting a potential move down towards about $12 a share. So That's not what I'm looking for, obviously, being a shorter term trader. Just wanted to point that out, though. But the stock does look like it's in trouble here in the short term as well. And here's what I'd like to see happen would be to sell the stock short below $22.75. Once it breaks below $22.75, I think the sellers are back in control or reestablish the control here. And we could set our stop at about $22.95. So that would give us just 20 cents of potential risk in this case if we're wrong. And I think that what we'll be looking for is a minimum downside target is $21.90. So that would give us 20 cents of risk for about 85 cents of opportunity in ACF.